things happening in the Central Valley. Are you a business owner? Every business owner, believe it or not, can improve. You're not an expert on everything, so a lot of people turn to business coaches, business coaching, and we asked a business coach to come on the show today and kind of give us an idea how we can benefit from some coaching. Our guest is Eric Merz from the Central Valley. Welcome, Eric.
Thank you.
Yeah. So
good to be here.
You help businesses with all kinds of things. Do you do the whole Central Valley? Do you stay in the South Valley? What's your region?
Most of my work's in the South Valley, but I've worked with clients online,
Yeah.
In Texas, Florida, Indiana, other places.
I guess it doesn't matter where you are now because everything's almost instant. We have Zoom and all these great tools.
Yeah, I really enjoy actually going into the business that I'm working with at least a few times,
Yeah.
but it doesn't always work that way. So we do what we can, and because a lot of times I like to get the feel for the organization, to understand their culture, understand what they're trying to accomplish, who the players are, so forth.
Have you ever walked in a business and thought, I could see something right away that maybe they could improve?
Oh, yeah, it's really a hazard of my job now, because even when I'm not on the job, I walk into a doctor's office or I walk into a grocery store, I see losses and potential gains that they're leaving on the table, but that's okay. It's like,
I always say I never realize how messy my house is until my mother-in-law walks in the door. Then instantly I see it. But you in your business, you're there every day. You can't see the forest for the trees sometimes, and I bet there's things just having somebody come in and look around, they can help improve.
yeah, I mean, it's always good for us to have third parties babysitting, looking over our shoulders, however you want to describe, depending on the relationship you have with the person. But if you try to do everything yourself, inside of yourself, you're going to miss a lot of things and opportunities.
By the way, today I think we specifically wanted to talk about, by the way, we talk about a different topic each time Eric comes on, but specifically today about the financial statement.
Yeah, the reason that I wanted to talk about the financial statements, because it's often overlooked by especially small businesses. The only time they look at it is maybe in conjunction with their tax return or preparation for the tax return, or when they're going to sell their business, they know they have to have these, or if they have to get financing, right?
Yeah.
And they may be doing these kinds of things often, but not understanding how they can use it on a even a daily basis, but at least monthly, looking at their numbers. And so there's three major components that I look at, and that's the balance sheet, which the balance sheet is really just a snapshot of where we are in terms of assets, liabilities. So you have all your cash, your accounts receivable. You might have equipment and plant. That's long-term assets. Then you have your liabilities, your loans, your accounts payable. And so if you can see where you are, that kind of flows to the cash flow. But really, you also look back. You can look back and see what it's changed from one year to the next. So balance sheet taken today, and then a year from now, compare the two and see what changed. And that's where you're going to find the nuggets in your business to where something's trending in the right way or the wrong way, so you to go back and look at, well, what's causing that?
Yeah, a great analytical tool, I would imagine. We lost you for half a second, but we didn't miss a great analytical tool. I love to analyze my business and compare and see where I'm going, and it helps me set up where I want to be, next. Do you find some businesses just don't even have a financial statement?
Well, yeah, or they don't do a very good job with their bookkeeping, so it's not very accurate. So then you go from the balance sheet to the profit and loss statement, which will take in account of time. So think of it more like a picture, like the balance sheet is just a snapshot. It's more of a movie that tells us what's happened over this last period of time in terms of our sales, in terms of our expenses, cost of goods sold, and the more you can dial in where those things are, in detail, the more opportunities you have to make small changes in many places to improve your bottom line, which is going to feed to your balance sheet. The balance sheet is like your overall health. It's like you go to the doctor and you get your blood work all done. It's all together. It's just a snapshot of where it was that day when you took that blood test or that X-ray. Okay, but the profit and loss really tells the story of how you got to that point. And then we have the cash flow projection, which is the third one, which you look at your accounts receivable, your accounts payable, you look at your projected sales, your projected expenses. And of course, that kind of gets into the area of budgeting, but I don't want to spend too much time on that. But if you know that you're going to have cash to make your payroll, that's kind of important, right?
Yeah, especially if you don't have the cash to make the payroll.
Yeah. Yes. So those three major financial statements can be created usually in the same software, and if you're using QuickBooks, which a lot of small businesses are. I know there's some other accounting softwares out there, but they all will do all those functions for you. But they won't do is actually capture it from the field, what's happening. You've got to enter it in when you make your payments. You've got to classify it to the right areas so that it gives you good data to go back and say, oh, we're spending a lot, and then you look in comparison, profit and loss this year at this time versus last year, what changed? And if we can't answer the question why it changed, then we got to dig a little deeper. But most of the time, business owners know, well, they charge more for this, or, we got a better deal on it this year, so it costs less, or we upped our prices. So we didn't necessarily sell more items or services, but we charged more.
I guess those tools could help you ask the questions or tell you what questions you need to ask.
Yeah, that's how I use them when I start to work with a client. If they have them already, they put it in front of me, and I also couple it with their bank statement, current bank statement, and a current credit card statements, things like that, because then I can see where the individual items, where they're spending them. They might have subscriptions that they're not using anymore. So that's where we're getting the cost cutting, but then also on the sales side, looking at the details of, the different categories of things they sell, which ones are up or down. So you want to see trends. It's up or down. And the only way you can do that is have these things in place so that you can compare one period to a previous period.
Yeah. Now, if somebody asked you to come in and take a look at their business, is that where you would start, with the financial statement?
Well, typically it starts more with a general complaint. They have a complaint. I'm not making enough money. I can't get enough sales. I don't spend enough time with my family. All those things are pretty much the door openers. Yeah. But then once they engage with me, this is where I go, because then it gives me the right questions to find out how we can unlock some of those potential savings or potential profits. And another way to put it is, like, we can also plug holes in the boat, right? Because the boat's taking water, we got to plug up the holes.
It may be a case of you might notice right off that they're paying too much for a resource that they need to produce their product, or maybe extra employees that just don't seem to have a role. What kinds of things might there be?
Well, yeah, so you brought up payroll. So if I looked at payroll for, this year to this date for one of my clients, and I compared it to last year, and I also look at their sales, and I say, well, your sales are down from last year, but your payroll's up. Well, yeah, the minimum wage went up and we had to raise the rate. Yeah. But we didn't raise our prices. Mm-hmm. Yeah. How are we going to come out on that? Yeah. We're going to lose something, right?
You could almost guess, yeah.
If you can take it, okay, and if you have to do that to stay competitive, you're going to have to find other ways to save some money somewhere to keep that margin in there. So you already have the justification to raise your price, most of the time business owners are afraid to raise their price because, they're afraid they're going to lose all their business. Then we do an exercise in that. We say, well, if you lost 5% of your business or 10% of your business, what would it impact you if you raise your price? Well, they'll probably make more profit to raise their price, lose 5 or 10% of their business, and maybe cut out the overtime because now we don't have to work overtime to deliver what we were delivering.
Yeah.
So we'll do like all those kind of analysis on, but it really gets down to the day-to-day operations. When you get all said and done, it comes down to how well they perform their services, how well they deliver, the products and services that they provide, and how much they can charge to get a decent margin on that in a competitive market. So we look for those things. But the snapshot and the movie, the profit and loss statement, and the cash flow analysis is going to give us clues as to where to look to start.
Do you ever come across a case where you tell the owner that, you're just working for a wage here, you're making less than some of your workers?
Well, I don't usually have to say it. Once we go over the numbers, they see it. And so then we talk about, well, what do we need to do to change that? And there's usually an answer, right? There are multiple answers, multiple solutions that are going to have to be put in play to solve that kind of a problem. Now, sometimes they have their business models changed on them because the environment. I mean, we went through COVID and it changed a lot of things in terms of the employment market and in terms of what you can charge. If you're, let's say in the medical industry, you're charging, you get what the insurance pays you, right? But that doesn't control your cost. Just because your costs went up because you have to pay more to keep people because the minimum wage has gone up, and that's the truth. You've got to be creative to come up with other ways to either reduce costs or increase revenue by offering other things that you can charge cash for.
Well, you kind of answered my question. This is one of our stock questions we ask almost all of our guests. Who needs you? And you kind of were saying some reasons that people might call you. They want to spend more time with their family or some other. What are reasons people should call Eric Merz?
If they're not making the profit that they think they should be making, let's take a look and see. I mean, I have some other analytical tools on the growth side, growing revenue, but also if we look at the P&L and we see that they're not in line with their industry in terms of their costs, well, we have to figure out why not. Yeah.
And you have those resources where you can compare them to other people in their industry. Yeah. That's
and actually, anybody can pull them off the internet. You just have to put the code in for your industry, and it'll tell you the gross profit margin in this industry is this, and the net profit should be this, and that's an average. But it doesn't work for everybody in every market, but it gives you an idea. Like if you're way off of it, you probably need to do something.
Do something different, yeah. Eric, we're running out of time, but I just want to give you a few minutes to say anything you want about any subject, anything we haven't covered, any point you want to get across.
Well, I just want to encourage people to get their financial statements together if they don't already. Your CPAs can help you. Bookkeepers can help you quite a bit if you don't know how to do it. Call me if you want some advice on how to start. Using your financial statements to help you in your business. I'd be happy to help anybody that would give me a call. And the other thing is look for multiple ways to improve your business. Don't just look in one place. And they can call me at 661-343-2373 or email me at eric@virtuacoaching.com. I think that's on the screen. And, I'll be happy to answer their questions. And, if it makes sense, we'll do an analysis. It's free, and we'll look at their business. And if they want to do something beyond that, that's fine. If not, we'll give them a report and they can run with it.
Free analysis sounds good. Hey, Eric, I know we're out of time, but if somebody goes, where should they start? Go to the website or call you on the phone? Where should
Just
they
call me or email me.
email? Yeah. All right. Ventura, I always say it wrong. VertuaCoaching.com. Check it out. Call Eric. Free analysis. Thank you so much, Eric, for coming on the show and sharing some of your knowledge with us.
Thank you.
And
Appreciate it.
And for our viewers, stick around. We'll be right back with another very interesting guest.